Hey guys, Rob Mitchell here, day trading pro trader, order flow, divergent secrets. I've got a cool short video for you here today showing you some concepts, and I've got a special announcement as well. Order flow, divergence, secrets, differences that make a different series. First off, past performance is not necessarily indicative of future results. There's a risk of loss trading futures. Don't use grocery money for trading. So in these videos series, the methods that I show you in these, my real intent is to show you different ways that you can establish components or concepts that can lead to a successful day trading system, method, or strategy. So for these examples, we're going to use tools that we know that work, that have proven historical results. And we'll do a smart trade markers test that we'll show in a minute. Following learning this new strategy and approach. One of the most basic concepts used in trading is that of divergence. You hear the term divergence all the time, but it's never really made particularly clear what's the difference between divergence or not divergence and all different themes and variations of it. And there are many. There are many. So divergence can be understood as an oscillator, a price oscillator, or an order flow oscillator that's going with price or against it, with or against. And that's the most basic concept. So that makes for several pattern classifications, and I'll cover those in a minute. So if you understand this, you always know where you're at relative to your oscillator trading tools. And so I'm going to show you in this video, I'm going to show you the different pattern classifications that you have of this, and then we're going to take one of them and we're going to take a look at it. So there's several potential parts to it. First off, all relations between an oscillator and price should be done point to point. It doesn't mean that you can do it not point to point, but I'm saying if you're going to learn how to use an oscillator, that you want to do it point to point on price. I see people drawing charts, they draw divergences, and they just, draw these lines across all kinds of price activity on the oscillator. And I'm suggesting that you don't do that. You just do it point to point. It took me years to learn this concept. Because when you have it point to point, you've created a pattern classification or science, and it's repeatable. If you don't, you could be marking things on charts that are not repeatable. Super important. So some oscillators are not tied to price, and some are. The Trap Trader Oscillator Advanced that we're going to use today in default mode is coded specifically to be tied to price. There are big dots on it, and those big dots correspond to the reversal bars that you'll see. And then the little dots correspond to the continuation bars that you'll see on the chart. And we'll look at a chart in a minute. But first, before that, what's Trap Trader Oscillator Advanced? So I'd actually checked today. I've never done a webinar on this because most of my activity is focused on the trading room and trading, and not as much on doing the videos and things. I've actually never done a video on it. I was like, wow, okay. We need to do a video on it, and I'm going to give you a special announcement in a minute. But so the Trap Trader Oscillator, initially, we developed this to help catch traders that were trapped on the wrong side of the market, because then their stops propel the movement in the opposing direction. That was the idea. And then as we became more advanced with it, it also became an excellent order flow momentum tool. So you've got areas, or you can use it in both ways, in addition to other ways as well. Super versatile trading tool here. And the pattern we're going to do today falls into the order flow momentum category that I'll call going with. Going with. And we'll get more on that in a second. So the Trap Trader Oscillator lets you see order flow in a simple graphic format without having to interpret tons of data. That's super important too. Why? Because of energy conservation. when you're trading, you're in battle at a certain level, and you don't want to be in a situation where you go into a fight, flight, or freeze mental mode. Yeah. And when you expire all your energy, your blood sugar drops, it releases cortisol into your system, and you go into a fight or flight adrenaline operating mode. And this is why a lot of traders have trouble with their trading, because they're not managing that. So the TradeTrader Oscillator is also specifically designed to help conserve the energy so that you can be your very best when you're trading. This is no small point. No, it's no small point. So in this video, we're going to look at divergence, concepts behind the divergence, where it is divergent, where it's not divergent, and using an order flow oscillator, TradeTrader oscillator that is tied to price point to point. Yeah, both in the immediate frame and in the different time frames, if you wanted to call it that. Yeah. So back to the divergence concepts here. So there's several cases. You can have the oscillator going with price. Yeah, price is going up, the oscillator is going up, price is going down, oscillator is going down. You can have an oscillator be going against price. The oscillator is going up, yeah, and price is going down, and vice versa, yeah, in different intervals. Yeah, and you can also have an oscillator can be leading price or lagging price, and depending on what level, time frame, or scale you're talking about, you could have any of these combinations. Yeah. But what are other ways? Yeah. The oscillator can be divergent to price going with the trend. Yeah. Can be divergent to price going with the trend. In other words, going in the opposite direction to the trend or to the immediate price action. Oscillator can be divergent to price going against the trend. And the oscillator can simply be going with. In other words, the oscillator is moving with the price in the same relationship as the structure of the price. Okay, so today we're going to explore this last one, as I already said, going with. But before we do that, because we're lockstepping order flow with price, we need to talk about that for a second. Yeah, but if you understand these basic relationships, all three of them, and you always know where you are within a divergent, non-divergent, or you could even call it correlated, all the themes and variations of it, right? And so you're aware of what's happening on your, or with your order flow in particular, which is super important because order flow tends to lead price. You don't want to get on the wrong side of it. Yeah. So it's super good to be able to see the market in this way that we're describing. Yeah. Next week, Wall Street influencers asked me if I would do a webinar with them. And so next week on the 6th of July, I'm covering a bunch of concepts in order flow and a whole lot more. In the webinar, what I'm going to do is I'm going to build a chart from scratch, and I'm going to discuss what I'm doing as I do it and the things that are important with it, and the logic of building a reliable trading chart and system from the ground up. Yeah. And then I'm going to reveal different trading patterns. I'll do as many as I have time for. I have about 5 or 6 of them slated. I doubt I'll be able to get to all of them, but I think you're going to like it a lot. Yeah, super useful information packed webinar. Like I said, I've never done a webinar on the TradeTrader Oscillator, and this is it. So you want to be sure to attend. So what I'm going to do is I'm going to put the registration link below, and I'll keep the link there until the webinar's passed. Okay. Yeah. Below in the description box down below, I'm going to put the link there for it. Be sure to register. Yeah. So in a minute, I'm going to show you a chart with these divergence patterns on it. And in the webinar, we're going to go a lot further, cover a lot more. But So, but before we do that, like I said, the most basic price action concept to understand for price oscillator relationship is that of the ABC structure in price. Now we're going to use a smart Super Renko bar here, and it has reversal bars that are bigger than the continuation bars. You'll see that in a second on the screenshot. But simply put, when you see the reversal bars go green, red, green, or red, green, red, while being inside in an ABC pattern, or 1, 2, 3, whichever you prefer. That's it. That's simply the pattern. So let's look at the chart. I'm going to show this to you, okay? This is today's chart in crude oil, okay? So see how I drew that yellow line that's slanting up? Yeah, I drew the yellow line that's slanting up. So I got a green reversal bar, a red reversal bar, and a green reversal bar. Green, red, green. That's ABC, yeah, or 1, 2, 3. I would call it 1, 2, 3, or ABC, yeah. Okay. Over that same interval, the trap trader oscillator is going up. In other words, that did not break that low right there, and this did not break the low either. Yeah, so they're both going up in an ABC. They're lockstep together. One's not higher or lower, meaning it's not divergent. Yeah, and so that's the buy right there on the green reversal. Here it does it again. It departs from there. The price goes up. Yeah, price goes up. It comes back down, and it hooks back up right there, and you can buy right there. If you put a break-even stop on that, that trade would have been profitable. You know, if you did. Then it departs from here again. It departs from there. Yeah, and they both go up together, both the yellow line, and then it hooks right there, and it hooks, and you place your buy order right there. Yeah, and it commences from there again, A, B, C. Both the trap trader oscillator and price are lockstepping together. Yeah, and you buy on there. How about this one? Oh, nope, they didn't lockstep together. That one broke. No, that one broke. How about this one? It goes to the high right there, and then it comes down, and then it comes up, and this hooks inside, and that hooks inside. This pattern, we call it a hook and pull. Hook and pull. It's often a reversal pattern. Yeah, and then that's the sell right there, and it goes down from there. You establish a new low right there, new low right there. It goes up, and then it comes back down, and it does a double bottom, but this is still higher. You know, that qualifies for this pattern, and that's the buy right there. Now this one goes lower right here. Well, and this goes lower over the same interval, and then that's the sell right there. That's the sell right there. And then this one does the double bottom again, but this is in a smaller scale. Smaller scale. By the way, smaller scale, I've described this in other series of this, webinars, these little mini videos. A smaller scale may be indicative of the commencement of a what? Trend. Commencement of a trend. It's not rocket science, but this is wide and this is narrow. Wide, narrow, ABC together, and goes here, and then trades for the whole day. Yeah. This little panel up here is for trade markers. That's what I use to mark these trades. And there are all kinds of divergence patterns on here where it's going the other way. Like for example, and we could have done those as well today. Yeah. So this is going higher. This is going lower. That's divergent. This broke, right? So like all the other ones, we marked all the ones that are going with, right? That means everything else on here should be divergent. Everything else on here should be divergent. You know, everything, right? So we just eliminated any other possibilities. I might have missed one. I don't know. Yeah, it's possible. Yeah. So, all right, that's it. That's all there is to it. Because order flow tends to lead price, you don't have to have all kinds of numbers all over your screen and everything else for doing this. It reduces it to a simple geometry that is either lockstepped or not. If it's not lockstepped, it's divergent. Yeah, that's divergent. So that's the entire enchilada. Yeah. So what I try to show you in these videos is where to look and how to look. So in today's case, I'm teaching you how to see divergence by knowing where it's not. Yeah, but I'm also showing you that the trap trader oscillator tends to lead, and it tends to lead enough that it can give you some good trading signals on something as simple as what we're doing here. ABC, ABC, they're lockstep together. Yeah. Does that mean this system is perfect? No, it does not. Yeah, you should always have a little bit more for a complete system. I always like to have at least two components. This is really just one component, although we do have the price action component. Yeah, so try out these themes and variations on your charts. Yeah, and find your favorite themes. Yeah, and make it your own. That's the idea. Yeah, that's the idea here. So personal exploration of the concepts may lead to substantial benefit. Let's take a look at the trade marker report that I did. This is for today. I used crude oil for this because that was what was in my face. Yeah. Can this work in other markets? Yeah, this will work in any reasonably volatile market. Stock indexes, E-mini S&P, NASDAQ, Dow, or Russell futures. Yeah, any of them work great. We got traders trading in all of them. Yeah. Or other markets for that matter. Yeah. So we've been trading these patterns for years in a live trading room environment. You know, we don't need to back test. And that's another subject altogether is back testing. The way that we approach these things, because we've been running in the trading room for 9 years, actively discussing every nook and cranny, every turn in the market, and applying scientific kinds of repeatable metrics to it, we've learned a real lot. Yeah, we've learned a real lot. And we've seen these patterns over and over and over again. We know they work. And usually by the time we get to doing a trade marker report, we're just confirming what we already know. So I ran this today. It's 86% profitable on this, 16 tick stop. Like I said, you could have run a break-even stop on here and reduce the losers, but it brought down the result a good bit. But I really like this method. So where can you get messed up with a method like this? Well, if the price starts getting inside, yeah. So you can have ABC structures, but when the market gets bound, that's the most likely place a system like this might run into trouble. Because when you get into a bound market circumstance, the edges of the market become counter trend plays for a large group of traders. Yeah. If you understand that, then you know where to stay and where to go. Yeah. So, all right, guys, it's that simple. The going with TTO pattern. There are many themes and variations you could do. This is the most basic form of it. Yeah. You could also do this on strings of continuation bars. We're not going to discuss that in this video. Yeah. Which is a whole nother area. Yeah. But when you combine other patterns with this, you might get what we call probability stacking. Probability stacking. It could even be market mapping, things like that. So we've got tons of other patterns that we teach. Like I said, 9 years in the trading room, literally with these trading tools, with the chart that we use, there are hundreds or even thousands of different themes or variations. And what I'd like to do is teach these things so that you can choose what works best for you. This means having freedom when you trade. That is a big deal. Yeah. What are we talking about here? We're talking about free will. Yeah. I never thought it was very enlightening to want to have a machine tell me what to do and behave like that. Yeah. That doesn't mean that you're using the machine to help you. Yeah. So that's the idea there. But you want to make sure that you're finding some reasonable amount of freedom within your trading, because you probably can't really have a whole lot of joy doing what you do without freedom as being a component of it. Yeah, you need to feel like you're accomplishing something that feeds your soul and all that good stuff. Yeah. So additionally, market mapping concepts we teach help you to know what's the most likely direction for range expansion, what's the market trying to do. Both these concepts are super important. So trading signals can tell you that, but it's good if you know it in several levels at the same time. Some people call that time frames. I call it different scales. Yeah. And that way you've got things that are pulling and things that are pushing towards the expectation of what statistically you know is likely to happen. So when you put all that together, super crazy powerful. And like I said in the webinar next week, we'll be covering more meat on that bone, yeah, if you will. So if you like this video, subscribe to the channel and like the video. Visit us at IndicatorSmart.com. There's lots of information there on how to build a trading system. And Stock Index Trading Room, oiltradingroom.com. If you need help with conserving your energy beyond just indicators, manifestingyourfuture.guru, sign up on the pop-up there. Yeah. What are the components I used in the video today? Smart trade markers, Smart Super Renko, and the Trader Oscillator. I think that's all we use. Yeah. So, all right, guys, that's what I got for you today. Thank you. Thank you. Be sure to register for the webinar on the link in the description below. I'll keep the link there till the webinar is over on July 6th. And join us in the trading rooms. We're more at IndicatorSmart. Yeah. Thanks for joining me on this, and we'll see y'all in the next one. Thank you. Thank you.